Risk assets globally have been under tremendous pressure in the recent past, and this has to do with uncertainty, particularly in the largest economy in the world. In the US, you have inflation that has run riot, and that has caused the monetary authority, the US Fed, the Federal Reserve, to take notice and start taking action to curb that inflation. A lot of what happens in the US in terms of inflation is demand led inflation. And so, to control that or to bring that demand led inflation down, there is an expectation that the Fed will hike interest rates. It has done so already. It is expected to continue to do so. And that is leading to risk assets globally losing ground. Now, there is another argument in terms of cryptocurrencies being a hedge against inflation. So, there is a little bit of confusion as to why cryptocurrencies have gotten sold into so sharply. To understand where we stand right now and why cryptocurrencies have been losing ground, I have with me Gaurav Dahake, who's the founder and chief executive officer of BITBNS. Gaurav, thank you so much for taking the time. I'm sure a lot of my viewers will want to know what is happening.
Right. So, one is the anticipation of the FOMC meeting with a lot of risk assets, equities as well. Most of them are now pricing close to a 75 basis points hike. And that is sort of reflecting. That is one. Second is with things that happened in the crypto market in the last 1 month with the Luna debacle. There are certain aspect of investors or traders who are sort of exiting the market to sort of re-enter later when the prices are sort of much better from where they are right now in terms of buying. So quite a few people are exiting. Third is there are certain institutions that have gotten at risk that hold a significant amount of crypto assets in the US. So one of them is Celsius. And because of that, that is causing a bit of fear because Celsius holds close to about 10 billion USD in assets. There are certain news that they are not able to honor some of the withdrawals of their users. That is one. The second is with the price falling, there is also an impending risk that MicroStrategy, which holds a large amount of Bitcoin, about 129K Bitcoins, they might get margin called. So a lot of these factors together are sort of making investors jittery, and quite a few of them are exiting to just figure out how things stand over the next couple of weeks, and then basically figure out re-entering the market.
Essentially, what you're saying is a lot of price action is taking place globally, and maybe there is institutional selling as well, taking advantage of the free fall that we've seen in the cryptocurrencies and hoping at some point that they'll get a better entry down the line. But then, where does that leave the retail buyer? There has been a large amount of interest in India as well in various pockets. Of course, that interest is somewhat diminished because of what happened in the budget. But there are people who continue to hold cryptocurrency. Where does that leave the small guy?
Right. The small guy right now, what we are seeing is some of them are staking their assets to earn additional yield on top of their crypto assets. So if they hold BTC, they're trying to earn yield in the form of BTC on the BTC that they hold. And many different exchanges offer these sort of products. Due to which what happens is that average buying price goes down. So that is one approach that we are taking. Second, what we are seeing a bit larger appetite is the investor community is more systematically trying to take an SIP approach into investing in these assets than trading. With the budget, the trading volumes have sort of gone down by about 50-60%, but the investing appetite is still there, and people are systematically taking an SIP style approach to kind of get access to some of these crypto assets.
You mentioned that trading volume has fallen. Do you anticipate that that will fall even further once the TDS kicks in July? And then at that stage, I'm talking about the Indian retail guy who puts money into crypto assets. How do they approach this?
Right, so the trading volume would fall further post July when these sort of the TDS part gets implemented across exchanges. But like the way to look at it is that probably would be the worst possible phase of the Indian crypto market. It possibly would sort of get better from there in terms of compliance and all those sort of burdens. Longer term, we are about less than 2 years away from the next Bitcoin halving. We're already 2 years from the last Bitcoin halving. So May 2024 would be the next Bitcoin halving. And people who sort of invest in when the prices go significantly down. So typically, bear markets in crypto have the headline index, which is Bitcoin, about 80-85% down from its peak. And we are close to about 70% right now. So if it goes closer to that range, that would be a substantial buying opportunity. And you kind of, if you're systematically investing, there is a larger sort of upside that would sort of go across. People still are investing into Bitcoin and other crypto assets globally. So the momentum is still there. It has albeit reduced significantly in India, but in like trading has reduced significantly more. Investing momentum is still there.
Final question from my end, Gaurav, and a lot of people still believe that there is immense potential for crypto assets, both as an asset class and as something that can be used to trade and to have commerce. But having said that, in the Indian context, with the regulatory framework as it stands, with the central government having made certain statements, with the Reserve Bank of India having stated its misgivings, do you anticipate that there will be a problem for somebody who wants to exit a crypto asset? There won't be a buyer on the other end. Is that something that people should be bothered about, worried about?
So right now, in spite of the taxation part, we still are seeing trading activity. There are buyers and sellers. It has reduced. Even with TDS, it would reduce further, but there would still be an active market where buyers and sellers would be out there. The challenge happens when it is declared illegal in some sort, and we don't see that happening considering taxation and other things have been sort of brought by the government on this specific asset. And even if that happens, there would be a certain window that would be given to investors, which happened in 2018 when RBI had its banking restriction on crypto exchanges and entities dealing with crypto. It was there was a 90-day window given where buyers and sellers could basically cash out or exit their assets. So it is not going to be a case where investors are left with their crypto. There would be avenues for them to sort of sell them. Right now, we see this is sort of the darkest phase around crypto in the Indian ecosystem, and things probably would sort of go better from here.
Talk to you, Gaurav. Thank you so much for joining in, and that perspective is certainly useful.
Thanks a lot.